Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Nasdaq hits fresh record high. Our portfolio, stock surge. Tip of the week, mini S&P reversal or trend following. And the weekly rollover.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Okay, where do we start from? Certainly from Nasdaq, which also this week rises over 3%, while on a monthly basis it rises by 8.8% and by 22% on a quarterly basis. So it's really in a strong uptrend and is now at an all-time high. Its volatility is decreasing compared to the values of the last few months, but it is still high compared to the long-term historical values. The mini S&P took a break, is up 0.4%, while the European indexes are declining. We see positive returns in gasoline at 5 days, 1 month and 3 months, as well as the silver, which we know to be in a strong uptrend, which is holding highs after a decline in the past week. The return at 3 months is even 50%. And Linux future also rose by around 6%. The whole grain financial sector is also positive, but long-term performance is modest. And finally, we see Bitcoin future negative with a drop of 1.5% in the last 5 days. As regards the term structure of implied volatility, in this chart we see the volatility indexes on the S&P 500. It is back in contango, as usual in a bull market. However, there are significant differences with respect to the VIX future term structure, which show a curve that is far from being in contango state. In fact, we can see a contango only between the first and the second expiration, or between the first and the third. Then the curve flattens, with the furthest expiration being very low. It is a strange term structure that is very unusual. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions. Okay, let's start. This week we will see trading systems on stock index futures and on Nasdaq stocks. I want to start from a system that I already showed last week. It is a system by Andrea Unger, which works on the mini S&P. This system had produced excellent results last week and during the current week has been able to make 5 profitable trades with only 1 losing trade. I already explained the logic behind the system last week. I just tell you that it is based on mean reverting techniques and that it uses Andrea Unger's patterns as filters. It is therefore a system that is based on a template that we provide to all participants in the 1-year target training program. Okay, let's go to see in detail the performance of the trading system. We see the equity line here. Let's take a look at the latest trades made by the system. There are 3 consecutive trades that have earned over $2,000 for a total gain over $10,000 in the last 2 weeks. I think this is a truly impressive result. Okay, let's change system. Let's go to my server because I want to show you a system that I developed about 3 years ago and that I'm particularly proud of. It works on Nasdaq stocks, and given the recent all-time highs, I think it might be interesting to take a look at it. It invests $10,000 per trade in a basket made up of the 500 most liquid stocks of the Nasdaq. And it is a system that is made available also as a signal service to the members of the 1-year target training program. As usual in the stock market, it works with mean reverting logic. Its peculiarity is given by the filters that, until now, have been able to suspend the trading activity during the most negative market phases. As you can see, it has a very linear trend despite the heavy declines of the markets in the last years. I'm referring in particular to 2018 and obviously to the recent decline due to the pandemic. Let's take a look at the system drawdowns. The worst historical intra-trade drawdown is around $34,000, while the close-to-close drawdown is around $15,000. Keep in mind that trades last on average a couple of days. The aspect that is interesting to note in my opinion is that in the face of a similar drawdown, every year the system has been able to earn more than the historical maximum drawdown. In the current year, the total net profit is around $43,000, $38,000 in 2018, and more than $50,000 in 2018 and 2017. As regards the main metrics of the system, the net profit amounts to approximately $223,000, the profit factor is 1.93, and the max drawdown is around $34,000. The average trade is $91, which corresponds to 0.9% per trade. If we look at the returns on a monthly basis, we see a remarkable consistency of returns, with only 2 consecutive losing months in the last 6 years. Therefore, considering what happened on the markets in recent years, the result has been truly astonishing.
Hello everyone from Andrea Unger, and today we will see how to distinguish a reversal underlying from a trend follower underlying. So here you can see the equity curve detailed of a very simple reversal strategy applied to the E-mini SP500 future. And in this case, the strategy is really simple and consists in buying the low of the previous session and going short on the previous session's high. So, having said that, we can see that the equity curve is overall good. It's overall good, of course, for being a very simple strategy, and this strategy doesn't have any position management techniques, such as take profits or stop loss or anything else. But in general, the equity curve is going up, and it seems to make quite good profits. And so I think this is a very good strategy to start from and to develop something more accurate and better. So having said that, we can see that there is a sort of consistency all over the years. And in fact, apart from some bad years like 2018, that has been a very bad year for all reversal strategies on equity indices in general, all other years are just fine, and most recently the 2020, it seems to be a very good year with a very interesting percent profitable. And we can also notice that in general, most of the profits are made from the long side of the trading strategy, while the short side is not excellent, and in general, it's not making profits since some years. But this is quite normal because equity indices, moreover the American indices, have a very strong bullish buy and hold, and so it's pretty normal that most of the profits are made from the long side. Of course, you shouldn't consider this as a ready-to-trade strategy or something similar. This is just an idea of how I would approach to a new market and how I would investigate if it's better to choose for a trend follower model or a mean reverting model. And I think this is one of the simplest way to do that.
Well, let's take a look at the rollover calendar for the next week. The feeder cattle settlement date is on 27th of August, but as you can see, the largest open interest is already on the October expiration. Regarding energy futures, natural gas, heating oil and gasoline, the settlement date is August 27th and August 21st respectively. So they have to be rolled in the next few days. And finally, we have the settlement date for Bitcoin future on 28th of August. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of The Trading Show.